Both medium-term and long-term fundamental factors remain favorable for the oil market. However, the rally may be limited by new stricter lockdowns. China is struggling to halt another fresh outbreak of the virus. Meanwhile, the ruble is slowly retreating against the US dollar, yet it still has a good chance of testing the level of 73. Oil prices advanced yesterday, supported by Joe Biden's speech. The nearest WTI contract closed the previous session at its highest level since last February. On Friday, both oil benchmarks have slipped into negative territory despite hopes for a potential stimulus package in the US. Brent futures for March edged lower by more than 1% to trade at $55.70. North American crude was following a similar trajectory, although with a slower pace of decline. However, WTI buyers failed to keep the price above the level of $53 per barrel. A new COVID-19 outbreak in China puts pressure on crude prices. Investors fear that tight quarantine measures will be introduced in the country, which is the second largest oil consumer in the world. The risk of lockdowns in the Chinese cities offsets the upbeat data on crude imports that showed a 7% increase in 2020. Yet in December, this indicator fell to its lowest level in more than 2 years. This is definitely a worrisome sign for the energy market. Traders are closely monitoring the dynamics of oil imports to China, and they also keep an eye on global demand outlook and a drop in the US oil inventories. Yesterday's background supported the Russian assets. The rise in emerging market currencies was also a positive factor, so the ruble closed the session just above the support level of 73 against the dollar. This mark turned out to be a strong obstacle that the ruble is struggling to overcome. In the coming sessions, the US dollar bears may well test this level unless the oil market enters a corrective phase. Today, the sentiment in the global markets has worsened and US futures ended up in the red. After a short break, the US dollar index has resumed its growth. Investors might be taking profit now after Joe Biden has officially announced new stimulus measures for the US economy. The markets have already taken this factor into account, which explains why the first response was neutral and then turned to negative. This pessimism may be explained by fears that the so-called helicopter money will result in higher inflation. In this case, the Fed will need to quickly raise the interest rate. It's worth noting that all stock markets look overbought now. The speech of Joe Biden is a good reason for correction, but the decline is unlikely to be strong and long-lasting. The outlook for the ruble is rather optimistic. Analysts at Credit Suisse expect the Russian currency to rise to the area between 65 and 70 against the dollar. And this is a conservative forecast, but it can still be confirmed in the future. At the moment, the Russian ruble is very unlikely to return to the pre-pandemic levels. Currently, the range between 70 and 72 seems more realistic and can be reached by the end of January. The accelerated rise of inflation and a possible hike of interest rates in the second half of the year are among the downside risks for the ruble. And that's all for now. Thank you for watching and stay tuned.